What's up guys, Jason here from CurrencyCaptain.com. In this video I want to talk to you about scalping, or in other words, how to enter the market the right way. Whether it's scalping on a short time frame, whether it's swing trading on a long time frame. Because what a lot of traders do, they'll just enter one position and then they'll wait until that position is in profit. Or even worse, they'll use a stop loss to manage that position, okay? And that's one of the worst ways to trade. It's a caveman way to trade, and in the long run, it's hard to see profit that way, unless you're just a genius trader that can get 90% of your trades right. So we have an interest rate decision in about 5 minutes. They're probably gonna keep the interest rates the same, but there's a lot of volatility during interest rate decisions. So I figured this would be a great time to teach you how to scalp and how to enter the market the right way. Okay, so I'm gonna be trading Euro USD, and I'm generally short on this pair right now, but I'm scalping, so it doesn't matter. So right now I'm gonna enter 2 mini lots. And the reason I'm only entering 2 mini lots is because I'm gonna enter more and more positions as I'm wrong. So I wanna make sure that I have a lot of margin left over to enter those positions, because even though I'm starting with 2 mini lots, it could go well into 1 lot, a lot and a half, 2 lots, if the price really starts to move against me, and I'll show you what I mean by that. I like to enter early because the spread starts to increase when there's a lot of volatility. So I don't want to wait until the interest rate decision comes out to enter my first position. I want to have that already in there before the action starts, okay? Before there's any sort of big news, you should have a general idea of which direction you are going to trade, by the way. All right, so if I'm wrong, every 10 pips, I'm gonna enter an additional trade. So this is 2 mini lots. I'm gonna add 2 mini lots for every position that I enter. So my second position is gonna be 4 mini lots. My third position is gonna be 6 mini lots. Fourth position is gonna be 8 mini lots, and so on and so forth, up to a lot or more. So right now I'm just gonna enter my second position as a pending order, just in case there's a lot of volatility and I don't have time to enter a second position. I wanna make sure it's a good 10 pips away, just for demonstration purposes, a good solid 10 pips away from my first entry. Okay, so you see my first entry is at 18.23, so my next entry is gonna be at 18.33. The entry after that's going to be at 18.43. The entry after that's going to be at 18.53, 18.63. Okay. Unless I'm right, of course, then it's going to be a boring 10 pip take profit, and everything is going to just work out smooth. All right. So I'm entering that second position as a pending order at 18.33. Okay. Just in case the market moves against me really fast and I don't have time to enter that. And we have this interest rate decision in less than a minute, so we'll see what happens. And of course, I don't know what the interest rate is going to be, but it's probably going to be the same. But either way, there's usually a lot of volatility. Okay, so it's 11 o'clock. The interest rate, it's 11 o'clock on the West Coast. Interest rate stayed the same. And I'm short. Okay, so what I'm gonna do is I'm gonna enter the third position at, again, an increment of the first position. So at 6 mini lots. And that again is gonna be at 18.43. First trade's at 18.23. Third trade is at 18.43. Okay. So I have my initial position open and I have 2 pending orders open. Once again, I'm doing it in 10 pip increments, and I'm multiplying it basically by the first trade. So if it's the second trade, it's 2 of the first trade. If it's the third trade, it's 3 of the first trade, etc. So my second position just got taken. So now I am 2 positions short. I have a 2 mini lot position short, and I have a 4 short. Okay, so what I'm gonna do, I'm gonna go ahead and enter my 4th position, since it's moving very quickly, at 8 mini lots. Okay. So now I have 3 orders working already. The first one, of course, I put in before the interest rate decision hit. And now my second and my third are all 3 working. So I'm entering my 5th position, of course, which is the full lot. So there we go. So now I have 5 positions short. If I would have just had 1 position short, it would have been going way against me. But of course I have 8 minis where it's kind of just straddling on that, my 4th entry. Then I have my 3rd entry where it's still down a little bit. My 2nd entry, it's of course down, and then my 1st entry is down. So again, this is called dollar cost averaging. Basically, the more you're wrong, the more strategically you purchase, because the price is technically better. Okay, so now I'm starting to see some profit on this trade. As you can see, I'm still down on the first order, 17 pips. Okay, but in total, I'm up about 10 pips. Okay, so now I have my 4th position's in profit, my 3rd position's in profit, and now my 2nd position is starting to see some profit. All right, so I'm up about 8 pips over all my trades. My 1st position is still down 9 pips. My 2nd position is barely, it's down, it's straddling that 2nd position right there. Okay, and as you can see, if I would have just entered that 1 position, I wouldn't see any profit, but I'm well into profit now, even without my initial position being in profit. And this could work on of course, with scalping or with swing trading or position trading. It's actually how hedge funds and even institutional investors and even brokers, in a way, it's how they trade. They don't just dump the position, they manage the position if they are wrong. And if you do it this way, you can come out on top and turn pretty much all your losers into winners. The only way you lose with trading or Forex especially is by just straight up exiting the trade, okay? So if that's your only method to get out of a trade, of course you're gonna take tons of losses, all right? You're not gonna see a steady, consistent curve on your account balance. All right, like I said, I'm long-term, I'm short. I think this is distribution about to be a short position over the course of a month or 2. So you can use this method to get into your, of course, scalp short term and exit the trade like I'm about to. Or you can use this method to use really small trade sizes to enter long-term positions and incrementally manage the position if you're wrong. Again, if I would have just entered 1 position, whether it was 2 mini lots or 8 mini lots or a full lot, I wouldn't be seeing much profit right now. My 1st position is barely up, just a pip or 2. And it's my position that I entered when it was going way against me that's bringing me into profit. I'm gonna go ahead and exit this trade just in a few minutes. All right. So there we have it. And I am out. As you can see, closes 1 position, $590 profit. And you can see a couple of these, like this $20 profit, that's a loss because I use this dollar cost averaging method to get out of my trades. And even this week, I had another trade, another $1,000 trade. So this method can really get you out of any trade that's going against you. Go ahead and cancel my pending order, and I'm fully out. I can enjoy the rest of the week. I can enjoy the weekend. And again, the worst way to trade or to trade anything, especially news, is just to enter 1 position and hope that position is right. So why does this method work? Well, first, because you'll find yourself actually adding to your trading account balance. If you do it right, you'll see that you'll turn a lot of your initial losers into winners. Another reason why this is a really good method, the dollar cost averaging method, is because especially for new traders, it gets you a little bit more excited about the losses. Now, when you're first starting off, of course, you want to be right, so you get excited about the winners. And then when you're losing, that's when you have a lot of anxiety. But if you use a method like this, the dollar cost averaging, and you use it right, then you'll find yourself getting a little bit more excited about the losers, because as you can see, even on this trade, you actually have the opportunity to make a lot more when you lose. So on this trade, if I would have just entered 2 mini lots, which was my initial position size, I would be up about 10 pips and I would have made about 20 bucks. But of course, I made about $600, which would have taken me 300 pips at 2 mini lots. So as you can see, because I was wrong, I made a little bit more money than if I was right. All right, so real quick before I end the video, I want to talk about some of the analytics behind trading this way. So I'm gonna go to my MyFX book. If you don't have a MyFX book, by the way, you should get a MyFX book as soon as possible because it's the best way to track your performance, okay? So just real quick, as you can see, I'm using 1 to 50 leverage. So it's not a very high leverage account, but you can still get really good results, as you can see. Ignore this, I was just experimenting. This is actually my account that I use for currencycaptain.com. So if you've taken any of my courses and you've watched the live trading, this is the account that I use for that, all right? So I should have made this video earlier when it actually showed the gain for today and the profit for today. But it was about 2.5% for the day, okay? So for the week, it's just Wednesday and I'm looking at a 11% return. All right, so let's just take a look at, I wanna show you, what was it that I wanted to, okay. So this is what I wanted to show you. If you look at my pips, I've actually lost pips. This month I'm down 269 pips. Because you are entering your first position and you could be wrong on that first, that second, that third position, but it's the fourth or the fifth that carries all the weight. So in a scenario where you're right on the fourth or fifth trade, you will see profit overall. But once you close those out, you'll have the first one is a loser, the second one is considered a loser, the third one is a loser, and the fourth one is considered a winner, even though your account balance increased. So when it comes to this sort of trading method, the analytics are not going to look absolutely fantastic. Like, for example, again, my expectancy. I'm expected to lose 1 pip per trade, okay? But I'm expected to gain $304 per trade, okay? So imagine that. How do you lose a pip, but you make $300 on that trade? Let me show you one more thing. I showed you my account earlier when I was trading. I had a position in there where I had made $20, okay? But if you look at the position, I was in it at 4 complete lots. All right, so I made $20 on 4 lots, all right? I wanna show you what that trade actually looks like. So these are all the pairs that I've traded on this account, and USD JPY was pretty much just this one trade where I made $20, actually exactly the one trade, $20.53. And you can see here, the pip gain was negative 62 pips, okay? So that right there, maybe I'll take a screenshot, but that right there was in fact a loss, but because I used dollar cost averaging, it came out as a winner. All right, and then lastly, we can look at the history here. Obviously I took these trades today, it was a little bit earlier today. So on the last entry, the 8 mini lots, which was the 4th entry, I had a full lot in there, but remember it didn't get, it actually didn't execute because the price didn't go that high. So on my 4th entry out of 4, I made 300. On my 3rd out of 4, I made 177. On the 2nd entry, I made 78. And on the 1st entry, I made $20, okay? So imagine the two traders. One enters 2 mini lots and just waits until they're in profit. And they make $20. The other trades confidently, uses dollar cost averaging, uses the same initial trade size, but comes out with $600 profit. Okay, so hopefully this video helped you out and helped you realize that using a stop loss is not the only way to exit a trade, okay? This is called dollar cost averaging, and I honestly think it's one of the best ways, if not the only ways, to trade Forex very profitably over the long run. So try to implement this into your demo trading and slowly transition it into your real account, and I think you'll find that your account balance will start steadily increasing while your losses start to decrease. All right, and once again, don't forget to hit that like button and subscribe to the channel. I'm gonna be coming out with a lot more videos. Hopefully I can catch some more live trades in the future. All right, I'll see you next time.